Welcome back. And now we take stock on Cigniti Technologies. Well, we've had earnings from there as well. Let's take a quick look at how the stock's faring. Well, marginally in the green for now, so certainly advancing, but it's been a little bit of a choppy day of trade for this particular company. That said, it does certainly look like a pretty steady quarter where we have seen revenues grow about 3.6%. And margins are largely flattish, barring the marginal decline. But let's get in the management of the company. We have Krishnan Venkatachary, CFO of Cigniti Technologies. Krishnan, good afternoon. Thanks for joining in. Can you take us through the quarter's highlights? What's led to this? And what are the expectations, keeping in mind the pipeline as far as deals go for this particular company?
Good afternoon, and thanks for the opportunity. It has been a pretty stable quarter considering the economic environment and where we were about a couple of quarters back as to what we envisaged. I think we were still our strategy in terms of working with strategic and growth accounts categorized and putting our efforts into these directions, and also coupled with that on the digital transformation has helped us consolidate the positions while the growth has been marginal at about 3.5%. But I think on the client wins, I think still we have won about 9 clients during the quarter, which is always a muted quarter with Thanksgiving and New Year and the decision making getting deferred. So that is one thing. And then our strength has been within the top 20 clients and the top 50 clients continuing to contribute in a bigger way for us, and which has been our strategy in terms of trying to push through and focus and garnering and winning a sizable pie through these larger clients. That is one thing. Having said that, I think on the margin front, we are while we anticipated the margin to move up, it would have been at about 14.9% on a normalized basis. But I think as a one-off expenditure on legal, we had to spend on certain employee separations, and that was essential and necessitated for us to get it out of the books. And that settlement took a toll, and we are fine with that. We know that for sure that will bounce back, and we're trying to improve on the margin front. Overall, for the year, if you look through, basically, I think the 3 quarters have been a progressive quarter, but I think the quality of the revenues and the consistent and the stability and predictability has increased beyond the level. And while we anticipated that, we initially anticipated that we should do a CAGR of average of about 20-22% over the next 4 years. I think that took a setback during the current year, where the growth could be in the region of about 8 to 10% comparing to year over year for the reasons in terms of the client referrals and the economic environment. I think barring that instance, probably, I think we are optimistic, and we are running at the while we'll be able to sustain and maintain the EBITDA in spite of all these one-off expenditures up to the last year levels in terms of trying to get there. But I think the efforts are on basically to improve it in the next year. We have just concluded the strategic discussions in terms of how much do we grow and what are the areas to focus and where we would move ahead with respect to the EBITDA in the coming financial year and thereon.
Right. Krishnan, Hiral on this side, one question I want to take with you on the margin front is clearly you have a strategy where you've actually started removing the low and negative margin customers, and high margin ones were onboarded as well. Now, taking that into consideration, the margin profile is still in that 12 to 12.5% range. How long do you think it will take you to get back to that 20% mark, which we have seen in the past?
Yeah, I think in the peak history of the company, we have been there at about 17%, and currently we are hovering around 14%, which is at about 13.8. If you look at it on the EBITDA, you're talking about EBIT, probably I'm talking about the EBITDA. At a EBITDA level, probably we have measured, we are there at about 13.8, 14% thing. We are, as I told you, that we are taking extra precautions on the process front in terms of the businesses so that we don't slip out on this one-off expenditure. But I think we are pretty confident that we'll be able to get to the 16% in the coming year. That's a target in terms of taking a strong growth coupled with all this digital engineering and with the optimizations in various areas what we are trying to look through. I think we should be there at about close to 16% plus. If you ask me honestly that whether we'll be there at about 20%, the whole idea in terms of 2028 to reach, the original plan was to reach to $1 billion and move north of 18% plus to be there at about 20% or so. is there. That's a target where we will have completely the digital engineering space contributing about 55% and 45% from the quality engineering space. That's a target, and it's a step-by-step target. But I think for sure in the coming year we should be there with a margin. I think it's a good point that we are trying to eliminate all the low margin yielding accounts, and even in this year and during this quarter and the coming quarter, we are eliminating few of the accounts, which should give a thrust for us in terms of enhancement in the margin here.
Right. Krishnan, in terms of the various segments in the clientele that you do cater to, where is it that you are seeing most amount of traction? Now, I understand that banking, financial services, at least for the industry, well, it's been a challenging environment. But how are things panning out there? And how are things panning out when it comes to your airline segment, for that matter, communications and energy and utilities? Can you talk us through this?
Yeah, absolutely. Fine. So if you look at banking, finance, and insurance, BFSI as a sector, if you look through very clearly that while the sector has been shaky, I think we are trying to position ourselves very clearly with respect to few of the banks, trying to be very clearly with them in terms of as an integrated partner. So with that being the case, basically, we have not seen challenges because we have not gone out and all and sundry to pick up the entire business which is coming through the segment. We have been selective, we have been careful, we are trying to get through using our tools to be a strategic partners with respect to these large banks and a few of the insurance companies. I think it's a very measured thought process which we are going. The traction what we have seen though there has been toughness in the market probably is on the retail and retail as a segment basically. I think we are contemplating with the idea as to how do we give a thrust to that basically, because there's a lot of traction which we have seen in that as a segment, and then we expect a few positive surprises to come through in that segment, which will come out at the right time. If the kind of negotiations what we're trying to do, and that sector could yield us a sizable chunk of revenue. When it comes to travel and hospitality, I think the sector has bounced back. There is a frenzy travel which is taking place as we have measured clearly. The segment which took a hit during the corona and post-corona, but I think it has bounced back clearly on that segment invariably. If you look at for us as a segment, I'll come back to the energy sector, but I think the energy sector contributes at about close to 12% of the revenue, while the BFSI, retail, and the healthcare segments all put together contribute about close to 70% of the revenue. We see a huge traction in the healthcare as a sector because we work with medical tech companies, and we have mastered the art of trying to do the quality engineering on the medtech devices, and then that is one thing which is leading to a cross-selling of business for us. So I think we are optimistic